Markets rallied despite the government shutdown, but with no sign of compromise yet, that momentum could reverse. Let's quickly recap. The S&P ends the week up 1% after last week's pause. It was supposed to be a big week for jobs. Monday opened higher ahead of the busy week. Tuesday saw job openings stabilize, higher than expected. But consumer confidence was lower and still in the recession worries range. Despite the mixed data, Tuesday climbed higher anyways. However, that night, Congress couldn't compromise by the deadline, triggering the shutdown at midnight. Markets opened Wednesday lower, but rebounded on ADP jobs data. ADP private employment tanked well below expectations, as well as a big revision to August's numbers. It was more weak jobs data for rate cuts, and more important this week with the shutdown delaying the headline jobs report. Markets continue to creep higher on Thursday, before ending the week more mixed on Friday. So investors are mostly ignoring the shutdown through the first 3 days. But here's where it could start to matter. Near term, it's likely to delay data releases, as we've seen with the jobs report and jobless claims. We could also see consumer sentiment weaken if the shutdown drags on, potentially a drag on spending. All of this could increase uncertainty and volatility with investors and the Fed flying blind. So what now? Next week is a bit light on the macro updates, but we will hear from multiple Fed speakers keeping the rate cut speculation game alive. In addition, we'll be monitoring the shutdown as an end would quickly see a quick release of all the delayed data, including the jobs report. We'll see if any compromise is made over the weekend. We'll have updates next week.